Hey traders, this is Christian from Market Trade Group, and it is Wednesday, November 10th, and this is your end of day market recap. Let me just get the screen in front of you so that you can see the risk disclaimer. Everything that we're going through is for information purposes only. You could read through that risk disclaimer on your own, and if the video is a little bit blurry, it just takes YouTube a little bit while to render the high definition version of the video. So we had a little bit of volatility, which seems like it was inevitable. I think at some point that we were going to get some volatility, but obviously very difficult to predict when and what was going to be the catalyst for it. If there's always a reason, or there's always a narrative about what the reason was why there was market volatility, but there's a handful of things today. I think the first thing that we saw, well, number one, remember, yesterday we had some earnings reports in some higher growth names that all kind of, I don't want to say all of them, but a couple of them went to the downside. So that's number one. Number two, you had a higher than expected CPI report. Remember, with the economic data, the market will react more than normal when you have something that is different than expectations. So the CPI report, that I sent out on Twitter earlier, and of course went over in the room earlier, was higher than expected. So 0.9 versus 0.6, right? That's a jump. That's a jump in expectations. Remember, yesterday the PPI report came out. One of the other gauges of inflation, and that came in right on the screws in line. And when you have an inline report, regardless of the level of the report, sometimes you get a muted reaction, which is what we got yesterday. So today, bigger than expected inflation, and then that caused a whole bunch of different effects. We also had, in addition, we had a bond auction that it seemed like there was no demand for the 30-year. Now, the bonds were already moving pretty decently before that, but they really took a leg lower and rates went higher. So notice the level that we took out. I review the bond chart almost every one of these videos because I think bonds are so important, right? Especially when the market's doing what it's been doing, right? We've seen over the last couple of weeks, notice what we've been doing, right? The move in bonds have been going higher. Remember, when bonds go higher, it's an inverted relationship with yields. So yields have been going lower, right? But doesn't this look a little bit similar to the move that we've seen in the market, right? This is 1021, or when this bottomed, we've seen this really nice rally in risk assets, right? Equities, higher multiple equities. And now that you see this kind of hiccup today, and it was a decent move, but off the lows, ZB, and we'll just go to this 1 hour chart here for just a minute, but I was shooting the midday video, and for members, which I apologize, I forgot to send out the video to midday members. I'm dealing with a family situation, and sometimes you just forget to do things when you're dealing with that kind of stuff. So look at what the bond move was off of that auction. Now, a lot of times what you see that when, not to really get into the weeds about bond auctions, but sometimes you see these bond auctions happen and there's an initial reaction and then things kind of go back to, they revert back. That's what I've noticed on some of these bond auctions where there is a big demand or there is not a big demand. Sometimes there's a reversion back. So when you take it for what it is and kind of just put things into perspective, right? Bonds were only down about 1% today and just gave back yesterday's move. Okay, but again, they ran into resistance. If we go back to this 1 hour chart in bonds, you could see also that we took out this version point of control. Notice we found support. All right, so that's one of the catalysts for the moves today. Then there was some of this Evergrande news too, which got sprinkled in there today. So, there was definitely, you could pick any one of those things, right? You could also say that the market has been getting ahead of itself, which I really believe is kind of the answer, right? We've talked about how when the RSI gets super, overbought, I think it got up to what, about a 75, 76, actually a little bit higher than that. I think it got right around that 75, 76, right? So that's the RSI indicator, and you could see, So again, I think just go back and look. Every time the indices get super overbought, usually they are met with some type of dip afterwards. So the question is, at this point, are we going to see more of a dip than what we've seen, or was this enough of a dip? The level that I mentioned yesterday was 4664. What I basically said in yesterday's video is if we start to violate that top of value and break into the value area for the week, I'm going to reduce some exposure. And basically that's what I did. And then, I think we just need a little bit more time to figure out, if there is going to be kind of a buy the dip mentality, or if we're going to if this 80% rule is going to play out. If you're not familiar with the 80% rule, it is once we are outside of a value area, either above or below, and we break in and establish ourselves, there's an 80% chance that we go all the way to the other side. So for me, I would rather play with those averages, and that's why I basically reduced risk. Right. So I try to give you as much transparency about what I'm doing. Every day I show my trade blotter and what I did, but you're going to see me blow out of some trades. If you're not a member of the room, if you're a member of the room, you're familiar with that. I ride the trend for as long as I can, right? As long as we're doing this, I stay in this trend. However, once I see that we're starting to lose this, and if we've been pretty overbought, I'm okay kind of moving back a bit into cash. Right. And I even said that last week one day, and I was too early. Right. I said, hey, I'm not feeling this, in terms of this move up. I think was getting long in the tooth, and we just continue to go higher. So it's really difficult to stick your neck out and to say, hey, this is going to be the day. We're going up too far too fast. Instead, I try to basically stay with it after paring down some risk on one of these days. I added back a little bit of some trades because they look pretty good to me. But this was an unwind today. Once we drifted into the value area. So it's important to have rules and to follow the rules. All right. We could go over a couple stocks. I see some bright spots here after hours. Affirm is all the way back up to 172, which is basically where it started the week. So monster. I mean, you're talking about a monster move. That's a 40-point move. So, obviously Upstart getting a lot of attention yesterday, and how much that stock was down today, 18% and getting hit. But you got to kind of take the good with the bad and not just focus on the bad, because that's a monster move. So, there was a couple other bright spots that I saw today, right? Tesla, right? So if we go to the daily chart, Tesla was up 1.4%, right? And actually held this 10,023 level. So it's a stock I'll be watching for tomorrow, and a few other high momentum stocks too, right? There was one CFLT, which actually this one is not in any of the major indices, but I think just returning to some of these names that had really good, nice gap ups, and to see if these things kind of hold in here. So I think there's going to be some trading opportunities. Arista Networks is another one too that I actually am hoping that this kind of comes in a little bit. So that's the thing, is if you're positioned correctly for this, you actually want to see some of these high flyers come in a little bit and take a breath, because a lot of times they reload with buyers. Right, Asan is one which may be a little bit too early. INMD is another one that I did what I've been doing the last 3 days, buying the morning dip and then unwinding some. So that trade continues to work. It did take out this level on the 1 hour chart, and I actually added a little bit. So I am buying the dip in a couple things, but for the most part, I'll show you the trade blotter of what I've done for the day, and this way you could see, rather than me make things up to you, which I don't do that either, but I know some people like to do that on Twitter. I went into a couple trades this morning. I went into some Cisco. I went into some Alibaba. I took a couple targets in Alibaba, and I just didn't like the look of the tape. And I just said, you know what, don't give this back. It also ran into this 200 period moving average. But I do like how this BABA looks. And the catalyst for that was, for why I entered this today, was because Tencent came out with earnings last night. And they said that things that they feel things are going to get better, and that they're out of a lot of the bad things that we've seen with the crackdowns in China and so forth. So that kind of caused a little bit of a lift to the Chinese Internet ETF, which was your best performing group, I believe, on the day. That was up 2.3% for the day, right? That KWeb ETF kind of looks very similar to the BABA chart, but you notice I've got a trend line drawn in here, and it held that support. So it has been making a couple higher lows. So maybe we see a move up to like 52 for the China names. All right, something to keep on your radar, considering the strength and considering the earnings that we got. What else performed pretty well for the day? So this should be highlighted. So we mentioned the move in bonds. We mentioned the CPI report as a catalyst. The utilities actually rallied the most. Again, I'm always looking at this column. Of course, the end of day, the overall performance of an area is number one important. Number two, what I like to do is see what areas of the market got hit the hardest. Right, those are the names in the red down here, are the areas of the market. Blockchain stocks, which have been absolutely on fire. Right, and energy stocks got hit, and I was holding a couple energy stocks, and I got out of those today. Interesting, the metals and mining ETF went down 2.7%, even though that's holding some of the gold miners. That was one bright spot for the day. Gold was up 1%, but you could see that gave back some of the profits. Actually finished down from the open today, so there was no major. So again, that's a good example of why I look at this particular column, because there wasn't a rush into gold either, right? It caught a big pop on the CPI number, and then faded a little bit after that. So again, that would like if I saw gold up 2% for the day, and it was bought after the open, then I would say, hey, there's some real interest in there in gold. So I think the gold chart, as I said in the weekend member video, I thought it started to look interesting. And I think it could still go here. 1858 is an extension away from the value area where it seemed to pause there, and we'll kind of have to see. So I don't have any major targets for this, but it is doing something different, right? We haven't seen this level since all the way back in June, so it's definitely doing something different here. All right, the small caps were down 1.6%, and the Qs also underperformed. So we could kind of look at a couple of those charts too, just for perspective. Notice that the Qs, have been a little bit weaker than the S&P, and they're almost into the 20-day moving average. This on the 1 hour chart, again, I always get a lot of clues from this 1 hour chart. Notice that you got to just let the chart adjust here for a second, but I think that there you go. We're not down to that bottom of value yet. That's around. Let's see, maybe that's the right level. 387. Let me just take a look at this in terms of Nasdaq Futures. I don't like how Thinkorswim is jumping around here a little bit. I think I rely more on the futures than the ETF, and I think we've got further to go to the downside, which is 15,769 on the Nasdaq Futures chart. Right, but you could see there's a little bit of support here at the point of control. Right, point of control is where the majority of the volume happened in the prior period, which is last week. So that's providing a little bit of support, and maybe that's something that we can possibly bounce from. If not, if that doesn't hold, then I think we're going down to the bottom of value. And again, 80% rule is in effect there. All right, so that's a couple things to kind of watch, and I really have to pour through the charts tonight. Like I said, I've been dealing with just a little bit of a family situation, so we'll look to kind of pour into these things. But again, if you wanted, just to kind of rehash what I did for the day, SHW, by the way, held up very well, right? I talked about a couple of the higher momentum names, but Sherwin-Williams, I got my first target. I mentioned yesterday that I forgot to take my first target in a swing trade. I was able to take that, and I left that trade on. But you could see, I tried some Billy today. I took this off right around the cost basis. I got dinged in AMD a little bit. That was the worst trade of the day for me. I thought we might see. I started to watch what NVIDIA was doing early on in the session, and it took off. And I thought AMD would do the same, and it didn't, and I had to take that trade off for a loss. A couple other things were, like Adobe is a good example. Hit 3 targets in a swing trade, goes back to the cost basis. My rule is just to take it off. And then just a couple other names too. Palo Alto, I opened up a starter in that one, not doing what I wanted to. So just unwound a lot of trades and just cleared the slate clean, right? So that I can kind of just reassess pretty objectively. Whenever I take trades off like this, it's usually a bummer of a day, and it was. I lost money today, but really, like, that's where the damage stops for me. Because I just decide to take off a lot of trades, and then I can kind of regroup a little bit. Right? It's also only the 10th of the month, so. A couple of things that I've talked about, and you've, for bottom line for this video, you've heard me say things like be realistic, right? And I think also one of the words that I like to use is keep things in perspective. We've had such a big move to the upside, so there was, like I said, a couple different things that probably brought us down today, but these markets. This has been going on for now 3 weeks where we've moved straight up. So putting things in perspective and realizing that it's still only the 10th of the month, it's still early in the month, there could be a really good end of the trading month to follow, right? But I would rather just, let the volatility play out for a little bit. And if this dip gets bought, so be it. I've got a list of areas that I'll jump into, and I'll review them a little bit more in tomorrow's pre-market session. All right, guys, have a great night. See you tomorrow.